Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary, and today we're going to talk about the roller coaster the stock market's kind of been on for the last couple of days. It has certainly been a week of ups and downs. Markedly today, actually, at the open, market opened extremely soft. So when I say soft, there were positions down 7-8%. Positions are actually even in our portfolios, which throughout the day began to perform better. By the end, close either positive or just very slightly negative. And just a really good example right now of the fact that we're kind of going through a period of volatility. We are in a bit of a corrective process right now. And so if you've been listening for the last couple of weeks, you know that we have been talking about the fact that markets were completely deviated from their long-term moving averages. They were overextended, overvalued, and we felt very strongly that a short-term corrective process had to be imminent just by how deviated we were. Remember, our long-term moving averages, they act like magnets or rubber bands to kind of pull us back because we have to trend somewhat within those averages. That's the way that averages work, right? So we were completely deviated, extended, overvalued, and essentially the market had really just kind of gotten ahead of itself. And so when we get into those situations, market has to do one of two things. One, it can trade sideways for an extended period of time to kind of burn off some of that excess, or we'll see short-term corrections. We saw these back in September and October, and I have been saying that a corrective process of 3 to 5%, absolutely, not only would it be expected, but it would be something that would likely bring the markets back into a healthier environment so that we could go ahead and attempt to move on to new highs again. And so last week we saw some volatility. We began to see market selling pressure begin in the middle of last week, and that really carried on throughout the week and then into this week. And so actually today, prior to the open, Nasdaq had already been down over 4% over the past few trading days. S&P 500 had actually been negative for 5 trading days in a row. First time in quite some time that we had seen that happen. And so today, actually, the S&P did close slightly positive, so I think that might be a good sign in general for the market. But again, this was very expected. And so I think sometimes when we see ups and downs in the market, especially when we've had such a strong advance, we almost forget what it feels like for the market to need to pull back. And we need to remember that markets absolutely cannot just go up. We have to have periods of time where markets have pressure, where, again, especially when we're extended and overvalued, we have to find ways to kind of come back into a normality. Otherwise, that eventual correction would have just been even steeper. So sometimes I know it feels a little uncomfortable. We don't want to see price pressure, but it's all part of a normal, healthy market. And so with what we're experiencing now, as long as our technicals hold, which for now they are, I'm going to show you in just a moment how that works. Definitely, this is something that was absolutely expected and really needed to happen in order for us to be able to move on. So let's take a look here. First thing that I'd like to show is specifically the Nasdaq. So remember, the Nasdaq is the index that's really heavily weighted in technology. So Apple, Facebook, Twitter, which have all been under pressure the past couple of days. Tesla particularly has been under significant pressure. Actually, after making some pretty significant advances, Tesla went negative today for the year. We had negative 8% yesterday. It's down another couple percentage points today. So here's though what I really want to kind of be able to show you here is, I think this is important. So here we are, and at our top here, which was really not that long ago, it was just at the beginning of February. Here's our 50-day and our 200-day moving average. So look at how extended we were. And then make this a little less big so that you can see. But so you can see, and every time that, and we were actually even more deviated here than we were to these other corrections, these processes we saw in September and October. So significantly overvalued and stretched away from our deviation. So this absolutely really needed to happen, not a surprise. And so just to kind of show you here how today Nasdaq closed slightly lower, not nearly as low as yesterday. We were down over 2%. By the way, I'm recording this on Tuesday, so I know that we're going to be watching this Wednesday. I'm actually going to be out of the office on Wednesday, so I wanted to get this done today. So as you're watching this, keep that in mind. I'm talking about the price action that happened on Tuesday. So this would have been our first line of support, which for now we're still trading above, and we're just going to have to watch and see what happens with the technicals. But again, I just really wanted to give you, number one, a little bit of reassurance that, like, hey, what we're experiencing right now, absolutely normal. Could this lead into a deeper correction? It could. And one of the things that we're watching right now is, as we've seen interest rates begin to pick up, that could absolutely weigh negatively on the stock market, because interest rates, part of the reason why a lot of investors have been able to substantiate why they're paying such an overvalued price for stocks has been because the cost to borrow money and interest rates are very low. And so if we begin to see an uptick in that, we'll have to see what that's going to do for the market itself. Another interesting point, Bitcoin not having a great week at all. And after beginning to hear, especially from the Treasury, about their thoughts on Bitcoin and its ability to come in and kind of become standard currency and the challenges with that, Bitcoin was down, I think, like 20% yesterday. It was down significantly again today. So, and Bitcoin is an area of the market that has seen a significant run up without a whole lot of substantiating fundamentals at all. So just an interesting thing that we've been kind of keeping an eye on watching. So something else that I want to just show you. So here's one of the things that we spend time looking at, because, you know, when there's noise in the market, like seeing significant ups and downs, it's kind of easy to start to feel like, whoa, I don't know how I feel about this. It's easy to kind of get caught up in when we see price action moving quickly. And so this is a snapshot that I feel like is always reassuring to remind me that, hey, just because we see some short-term downward pressure on the market, that might not actually give us a good idea of how that area of the market is actually faring overall. And so this is our dynamic asset level investing snapshot as of today. And so as you can see, very reassuring. So domestic equities absolutely remain the strongest place to be. Small, mid-cap growth, consumer cyclical, technology, as well as large cap growth, followed very closely by international. And then, so as you can see, nothing has really changed in terms of the actual landscape of the market. Those areas of strength that we've been seeing for a significant period of time, they remain. We're just seeing kind of like a cooling off period in some of these areas. And what I want to go back to do is, hey, Allie, who's helping me, can you type in XITK for me? I just want to show you this. This is something that just kind of popped in mind. XITK. This is our technology fund. And I want to show you, I guess we're having a little bit of a, our market, is it dying on us here? There we go. Okay. And I just want to show you this because I think that this is important. So XITK over the last 5 days is down about 4.75%. And so you see that and you think, oh my goodness, this is an area of the market that is really weak and maybe we should be avoiding. But when we look at our 3-month performance of XITK, it's up 28.64%. And so I think that it's a really important reminder to the fact that, so yes, XITK has cooled off over the last couple of days. We're down 4.75%, but over 1 month, sorry, over 3 months, we're up 28%. Over 1 month, we're still up over 5.5%, including that negative return there. So again, these areas that get extended and overvalued, that when we're in the right areas, it's kind of, you see these pullbacks and it's easy to start to feel like maybe these are no longer strong areas. And again, it's really just a healthy pullback, an opportunity for an area of the market to kind of take a breath, pause, gather itself almost, if you can imagine, after having overextended yourself and then being able to move on again to new highs. And so I just thought that that was a helpful way to kind of look at that. And so we are So here's my contact information. I know especially, it's easy to feel real good and secure about things when we continue to see advances, but in those times where we begin to see the market cool off and pull back, those are the times that I know particularly that maybe we begin to question, hey, am I in the right area of the market? Am I invested appropriately? What's my investment management strategy? Do I have a style? And so if you're an investor and right now you're feeling uncomfortable with what you're seeing within your portfolio, we'd love to talk to you, take a look at things. Hopefully, maybe we can help explain some things to you or help make things make sense. We're here to help. We appreciate the fact that you've tuned in, and if you have questions or things you'd like me to cover for next week, please reach out, and we'll obviously continue to be closely monitoring the situation right now as we're seeing, the markets just begin to pull back a little bit. But again, from a technical standpoint, we think that this is healthy and normal, but we will continue to monitor and watch it. My contact information, our website, victoryfiduciary.com. There's additional blogs that I've written as well as other videos, and we'd love to hear from you. So with that, have a great day, and we'll see you next week.